Bismillahirrahmanirrahim. This is the second video on the Governmental Fund Accounting System. In this video, we will illustrate General Fund and Special Revenue Fund Accounting, and we will solve an illustration comprehensively and explain how to journalize transactions for general funds and special revenue funds. We will explain how budgetary control is done for revenues and appropriations of expenditures through an encumbrance system. We will also illustrate how to post general entries in the ledger. We will also show how to prepare pre-closing trial balance. And finally, how to prepare a statement of revenues, expenditures, and changes in fund balances and the balance sheet. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We hope that this video helps aspirants of CPA, AICPA, ACCA, and CMA programs. We also hope that this video help students of Masters in Financial Accounting, Masters in Taxation, Masters in Governmental Accounting, and students who have joined training courses of Saudi Organization for Certified Public Accountants, SOCBA, and other accounting program aspirants. We also hope that this video help fresh graduates who have joined governmental or not-for-profit organization and want to refresh their learning about the governmental fund accounting, its journalizing, posting, and recording the pre-closing trial balance and financial statements for general fund and special revenue fund. Before we start solving exercises, I would like to review the concept of budgetary accounting. Government budget determines the estimated revenue and appropriations. This helps to compare the estimated revenues with actual revenues to ensure that the estimates are realized. At the same time, expenditures are made against the various appropriation accounts to ensure that sufficient balances are available for additional spending. Budgetary accounting records estimated revenues and appropriations to establish the reference points for budgetary controls. Government budgets are the important control mechanism as they help in monitoring the actual expenditures with the budgeted appropriations. This helps in evaluating the financial performance of the government, and it helps in taking necessary corrective actions where necessary. For example, the estimated revenues help to determine the amount of resources that will be available for spending during the fiscal year. And if the actual revenue collection is lagging behind, then necessary corrective actions can be taken, like expenditures are reassessed so that the expenditures are in line with the projected funds. So in budgetary accounting, both budgeted and actual revenues and budgeted and actual expenditures are recorded. This helps in determining how much revenue has been collected till date and how much more needs to be collected during the fiscal year. It also helps in determining how much expenditure has been done against the appropriated amount till date and how much more can be done for the remaining fiscal year. Recording expenditures against the appropriations help in determining accountability and ensures that actual expenditures do not exceed the appropriated amount. This helps in achieving the objectives of the budgets effectively. Recording budgeted and actual revenues, as well as appropriations and charges against them, also provide the data needed to cut down the expenditures in case they analyze that the actual revenue collection may fall short. Budgetary journal entries are made to record the budget, to record changes to the budget if any, to record the placing of purchase orders or contracts, that is recording encumbrances, and to reverse the entry when items ordered are received. Budgetary accounting journal entries should be considered separate from financial accounting. Governmental entities always adopt budgets for transactions and events affecting the general fund and often adopt them for special revenue funds. This video will explain transactions that occur routinely in general funds and special revenue funds. I would also like to add that these two funds are subject to similar accounting and financial reporting principles. So the objective of this video is to demonstrate the relationship between budgetary and financial accounting and reporting. Yet another objective is to describe the full accounting and financial reporting cycle from recording transactions and events to prepare financial statements and ultimately to closing the books. So let us start with an illustration. The village of Catskill, which operates on a calendar year basis, is governed by an elected board of trustees. Its day-to-day activities are administered by an appointed village manager. The village has a general fund which is financed primarily by taxes on real property and a training special revenue funds. And we will talk about special revenue funds after we finish explaining recording of general fund transactions, which is financed by an annual grant from the state. The village manager is responsible for preparing annual budgets for activities accounted for in both funds. The budgets become law after review and approval by the board of trustees. The general fund balance sheet at January 1, 2013 showed cash of 70,000, no liabilities, and a fund balance unassigned of 70,000. Budgetary control over the supplies appropriations is maintained through Encumbrance System. The approved budget for calendar year 2013 is as follows. Okay. So governments, generally use vouchers for payments. That's why we will be using vouchers to record the liability before payment. And first of all, the adopted budget is going to be recorded in the general fund at the beginning of the fiscal year. So the first journal entry is made for the estimated revenues, and the estimated revenues are debit, and as the government earned revenues, the estimated revenues is reduced by actual revenue received. The debit to estimated revenue means that the actual revenue will increase the fund balance, while the estimated expenditures, that is budgeted appropriations, are credit and they will decrease the fund balance. So let us start with the first journal entry, and this is going to be the budgetary journal entry, and the journal entry will be, we have real property taxes Okay, so we have estimated revenue, real property taxes, debit by 2 million. We have licenses, estimated revenues, licenses and fees, debit by 70,000. Then we have estimated revenues, fines and forfeits, 50,000. Then we have the appropriations, general government salaries, 300,000. This is credit. Then we have public safety department salaries of 1,200,000. This is credit again. Then we have supplies of 100,000. Then we have salaries of 400,000. Supplies for 95,000. And appropriations for debt service 5,000. And since the total of debit is more than the total of credit, so we have increase in the fund balance by 20,000, and that is credit again. Let us go to the second journal entry. Cargill levies the real property taxes provided for in the budget. Based on past experience, Cargill assumes all taxes, licenses and fees, and fines and forfeits will be paid either during 2013 or soon enough thereafter to pay expenditures attributable to 2013. Therefore, it makes no provision for uncollectible. And the journal entry will be property taxes receivable, and they are receivable in property taxes are 2 million, licenses and fees is 70, and fines and forfeits is 50. So we record all of these as receivables, 2 million, and then we have 63,000 and 47,000. And then revenues, property taxes are credited by 2 million. Revenue, licenses and fees is credited by 63,000, and revenues, fines and forfeits are credited by 47. Then we go to number 3. Because of the timing of the two property tax installments, Cargill's cash flow projection indicate that it needs to borrow 400,000. On January 3, Cargill sells tax anticipation notes in the amount of 400,000 to a local bank, payable with interest of 4,000 on October 3. Now, since this liability is short term, so the borrowing is going to be recorded as a liability for the general fund, and the journal entry will be cash is debit by 400,000, and tax anticipated notes payable is credited by 400,000. Then we move on to number 4. Cargill receive cash 980,000. So cash is debit by 980,000, and now our receivables are going to be credited by 980,000. Then Cargill replaces purchase orders for supplies chargeable to the following appropriations, and there are 4 purchase orders. So and when there are purchase orders for against appropriations, we are going to first of all record the encumbrances for the purchase order 1, 2, 3 and 4, and the budgetary journal entry will be encumbrance public safety supplies is debit, and both of them are for public safety supplies. So this is debit by 97,000, and street maintenance supplies is debit by 90,000, and the budgetary fund balance reserved for encumbrance will be credit by 97 plus 90 will be 187,000. Then the supplies ordered in all four purchases are received and inspected. The invoices for purchase order 1, 2 and 3 are for the same amounts as shown in the purchase order 45, 52 and 70. However, the invoice for purchase order number 4 is 21 because the order allowed the supplier to ship. Okay, so first of all, we have received the orders, so we are going to reverse the journal entry. So this budgetary entry is going to be reversed, and obviously now the budgetary fund balance will be debit and encumbrances are going to be credit. So budgetary fund balance is debit by 187, and encumbrance public safety is credit by 97,000, and encumbrance street maintenance supplies is credit by 90,000. Next, because we have received the order, so a financial journal entry will be recorded to record the expenditure and the liability. Because we are not paying, we will be following the voucher system. So expenditure public safety will be debit, and this will be debit by 97. There is no problem as far as the purchase order is concerned. The amount is the same, 97. And then we have expenditure street maintenance, and that will be 70 plus 21, and that is equal to 91,000. And the vouchers payable will be 188,000. You can notice that the amount shown in the budgetary entry to reverse the encumbrance are the same amounts. To record the encumbrance, but the amount shown in the financial entry is more by 188 because the purchase order received is 1,000 more. We go to the next transaction. The voucher prepared in the previous transaction are paid. So obviously voucher payable was 188 and we are paying this amount. So voucher payable is debit by 188 and cash is credit by 188. Next, during the year, Cardsguard receive additional cash from the following resources. So we are receiving additional money. So cash will be debit by 1,110,000, and our receivables are going to reduce by 1,63,000 and 47,000. Then on October 3, Cardsguard repay 400,000 borrowed on a tax anticipation note earlier in the year together with interest of 4,000, and this is with reference to transaction number 3 when we have taken the loan. Now we are paying it back. So tax anticipation notes payable is debit by 400,000 and expenditures debt service will be debit by 4,000 and cash will be credit by 404,000. Then during the year, Cardsguard pays salaries to its employees chargeable to the following appropriations. Now when we are paying the salaries, then GASB require that salary expenditure must be accrued in governmental funds because they are normally paid in a timely manner and in full from the current financial resources. So we are not going to have a encumbrance entry for the salaries as these expenditures are predictable. So the general entry will be expenditures general government salaries is debit by 290,000. Expenditures public safety salaries is 1,175,000, and expenditures maintenance salaries is debit by 380,000, and cash is credited by 1,845,000. Then we go to number 11. The last payment for salaries in 2013 covered the pay period ended Friday, December 27. Payment for December 28 to 31 will not be made until 2014. And if that is the case, this is an example of salary being accrued, and because it is going to be paid, so this is going to be recorded over here. And the general entry will be once again general fund, general government salaries expenditure is debit by 4,000. Expenditures public safety salaries is debit by 15,000, and expenditures street maintenance salaries is debit by 6,000, and we are not paying, so this is going to be accrued salaries payable, and this is going to be credited by 25,000. Next, let us prepare the budgetary control ledger accounts for estimated revenues and appropriations, and we will first make the budgetary revenue ledger account for real property taxes. Now, for real property taxes, we have first of all we are going to have the if you look here on the top, we have real property taxes of 2 million. So this is the budgetary amount budget, and this is the estimated revenue was 2 million, and the difference is going to be recorded over here as 2 million. Then in transaction number 2, this has been recorded as a receivable. So this is the property tax levy, and this is credit. Sorry, this is going revenue property taxes is 2 million, and the balance now is 0. Next, we will make the budgetary revenue ledger for licenses and fees, and for estimated revenue, fines and forfeits as such. So for the again we have in the transaction number 1, this is the budgetary entry, and the amount is 70,000. And the balance is 70,000. Then in transaction number 2, there is a receive. We are recording this as a revenue, license and fees. This is credited by 63,000. So we have a balance of 7,000 to be collected. For fines and forfeits, again we have 50,000. 50,000 and the balance is 50,000, and then we have a credit for the fines and forfeits for 47,000. So still we have to collect 3,000. Next, we are going to prepare budgetary control ledger for appropriations, and in this question you can see there are two appropriations. Obviously, if you can remember that for salaries and even appropriation for general government salaries, they are, because they follow a predictable pattern, then for such appropriations, encumbrance serve no control purpose, so there is no need to record the encumbrance for them, and the amounts available for spending is going to be reduced directly by recording the expenditure. So we are not going to prepare the appropriation ledger for salaries. But coming to the, we are going to go for appropriations for supplies and street maintenance. So we have street maintenance over here, and we will look into all the general entries that are there. First of all, we have the budget, and the budget was 95,000. So we have appropriation of 95,000. Then we have made a purchase of 70 and 20, that was 90,000. Encumbrance was 90,000. If you can recall, there were two purchase orders. Purchase order number 3 and purchase order number 4 for 70 and 20. So first of all, we are going to record we have first of all placed the purchase order, placed purchase order number 3, and the encumbrance was debit for 70,000, so the balance is 25,000. Then we have placed purchase order number 4, that was for 20,000, and the balance now is going to be 5,000. Then we have received in transaction number 6, we have received, so we are going to we have received these purchase orders for 70 and 20. So received, this was placed the order, and then now we have received the purchase order number 3, and when we receive the purchase order number 3, the amount is going to be reversed for encumbrance, that is 70, and now the total becomes 75. Then once we receive, obviously this is going to be recorded as an expenditure, so expend purchase order number 3, and this is going to be an expenditure of 70,000, and this gives us a balance of 5,000. Then we have received purchase order number 4, and when we receive purchase order number 4, then the encumbrance will be reversed from debit to credit, that is 20,000, and now the total is 25,000. and we have to record the expenditure. Purchase order number 4, you can remember it was for 21,000. We have received 21,000, so we have the bill is for 21,000 and that is an approved amount, so we are going to debit expenditure by 20,000 and this becomes 21,000, so the balance is 4,000. Next, we prepare the appropriation ledger for public safety, and for public safety again we have the budget, and the budgetary amount is 100,000. As a matter of fact, we should have prepared the public safety supplies first and then the second, but it doesn't make a difference over here. So appropriations are 100 and the available appropriations are 100,000. Then we have placed purchase order number 1, and purchase order number 1 was for 45,000. For 45 and 52, so we have 45 and the balance will be 55,000. Then the next is we have placed purchase order number 2 and that was for 52,000. So the balance is 3,000 now. Then we received placed. Then we received purchase order number 1. So first of all, the encumbrance is going to be reversed and that makes 48,000. And then we are going to expenditure, record the expenditure for purchase order number 1 and that is 45,000. So the balance is 3,000 now. And then we receive purchase order number 2, and when we receive purchase order number 2, again the encumbrance will be reversed. This becomes 52,000 and that becomes 58,000. And now we are going to record the expenditure for purchase order number 2, if you can, that is for 52,000. So again 52 plus 3, sorry, this should be 55. 48 and this will be 3,000 and this will be 55,000 and this amount will be balance is 3,000. That is, still we have 3,000 that we can spend during the rest of the period under the heading of public safety supplies. Next, we are going to prepare the I have simply posted the information in the T account over here, and I would like to add only few over here. There is a balance of 70,000 and under the fund balance unassigned, so we have a T account fund balance unassigned and that is 70,000, and we have recorded all the transactions that are there, and based upon recording the transactions from the journal entries 1 to 11, these are how the balances are going to be. And because there is a beginning balance of 70,000, so cash is also having a debit over here, and then the rest of the T accounts you can make by yourself. Debit, you know how to record you may be knowing how to record debit and credit. And once we have done this, we are going to prepare the pre-closing trial balance. And we have let us start with the balances. First of all, we start with just keep one thing in mind, that when we prepare the pre-closing trial balance, we first record all the budgetary accounts. So we have all the estimated revenues, that is 2 million, and that is going to be debit. Then we have estimated revenue 70,000. Then we have estimated revenues, fines and forfeits 50,000. Then when we have appropriations, general government salaries, and this is 300,000. Then we have appropriation public safety salaries 1,200,000. Then we have appropriation public safety supplies 100,000. We have appropriation street maintenance supplies 400,000. Then we have appropriation street maintenance supplies 95,000. 95. Then we have appropriation debt service 5,000. And then we have budgetary fund balance 20,000. Then we are going to record all the financial accounts, and we have first of all the unassigned balance of 70,000 in the credit. Then we have cash, the balance is 123. Then we have property tax receivable 20,000. Then we have revenue property taxes 2 million. Then we have licenses and fees. There is no balance. Revenue, licenses and fees, that is 63,000. Then we have revenues, fines and forfeits 47,000. Then we have expenditure public safety supplies. Expenditure public safety supplies is 97,000. Then we have maintenance supplies 91,000. Then we have expenditure debt service 4,000. Then we have expenditures general government salaries 294,000. Then we have expenditures public safety salaries 1,190,000. Then we have expenditures maintenance salaries 386,000. 86,000. Then we have accrued salaries payable 25,000, and the total will be 4,325,000 for debit and credit. You may be knowing sure that the total of that debit and credit must be equal as far as the trial balance is concerned. Next, we are going to look into the special revenue fund. And for special revenue fund, we follow the same guidelines or same instructions. Cardsgill established the Training Special Revenue Fund based on state law. The state gives all municipalities that has law enforcement units an annual grant that may be used only for paying police officers while in training status. In accordance with the state law, any balance remaining in the special revenue fund at year end is carried over the following year. On January 1, 2013, Cardsgill Training Special Revenue Fund has cash of 10,000, no liabilities, and a fund balance restricted. You see, that is the difference between a special revenue fund and a general fund. General funds are unassigned, while special revenue funds are restricted. So first of all, once again, we go to record the budgetary journal entry. So estimated revenue, intergovernmental revenue was 45, that is debit by 45. The appropriations are 50,000, and the difference is the budgetary fund balance. In this case, obviously, it is debit because credit is more than the debit. Then during the year, the Cardsgill they received 30,000 as a police officer training grant. The state also advises Cardsgill that as a result of budget difficulties, no further grant will be made available. To ensure its training expenditures do not exceed available resources, the village trustees amend the training special revenue fund budget, reducing both the estimated revenue and the appropriations. So first of all, we are receiving 30,000. So cash is debit by 30,000 and revenues are credited by 30,000. That is number one. And then we have to reduce our appropriations and the estimated revenue, and to do this we simply reverse the journal entry. Appropriations are debit now by 15,000 and estimated revenues, intergovernmental revenues, are credited by 15,000. Then they are paying the salaries, and you know that for salaries we don't record the encumbrance. So expenditure public safety salaries is debit by 33,000 and cash is credited by 33,000. Next we are going to prepare the T account and the budgetary ledger as well. And in our case we have the first of all we prepare the T account, and we have fund balance restricted over here, that was for 10,000. So this is credit by 10,000 and cash will be debit by 10,000. Then we have estimated revenue, real property taxes. There is an error here, it should be intergovernmental revenues. So this is debit by 45,000 and budgetary fund balance is debit by 5,000. Appropriations are credit by 50,000. Cash is debit by 30,000. Revenues intergovernmental is credit by 30,000. Then appropriations are debit by 15,000 and estimated revenues are credit by 15,000. And then expenditures, public safety salaries is debit by 33,000 and cash is credit by 33,000. and now we can have a balance over here of 10,000. Here the balance is 30,000. Budgetary fund balance is 5,000. Appropriations will be 35,000. This will be 7,000, 30,000, and 33,000. Next we are going to prepare the inter-budgetary ledger for intergovernmental revenue. We have the budgeted amount, and the budgeted estimated revenue is 45,000 is debit, and then the total is 45,000. Then in the second journal entry we have received the revenues, and the revenues that we have received is 30,000. So we need to collect still another 15,000. However, they are not going to receive any further money, so this will be a adjustment in the budget. The estimated revenue are going to be credit by 15,000, and now this becomes 0. We are not going to collect any more money. Next we are going to prepare the pre-closing trial balance, and we have the estimated revenue intergovernmental. This was debit by 30,000. Budgetary fund balance was 5,000. Then we have appropriations, public safety, 35. These are the budgetary accounts, and then we prepare the financial accounts. We have the restricted fund balance of 10,000 credit. We have cash for 7,000. Revenue intergovernmental is 30,000, and expenditures are 33,000. So if we make the totals is 75 and 75, so the totals are equal. Next we are going to prepare the statement of revenue, expenditures, and changes in fund balance and the balance sheet. And for this we are going to use our trial balance for the two funds. So I will put it like this. So we have the, first of all we are going to prepare the statement of revenue, expenditure, and changes in fund balance. And you can see that when we prepare the statement, we put the two funds on together. So first of all we have, and we are not going to record the budgetary accounts, we are going to record the financial accounts. So we have the fund balances will be in the balance sheet. We have, well, let us look into the revenue. The revenue is 2 million. Property taxes are 2 million. Licenses and fees are 63. And fines and forfeits are 47. This intergovernmental is for the special revenue fund, and for the intergovernmental we can see in the trial balance for intergovernmental revenue is 30,000. So we make the total, and the total is 143,000 and 30,000. Then we record the expenditures, and we go again for the pre-closing trial balance for general fund. In general fund, we have first of all general governmental salaries. Where is general fund? General fund salaries is 294. Then we have public safety salaries of 1,190,000. Then we have public safety supplies, and that is public safety supplies is 97. Then we have street maintenance, and that is for 386. Then we have street maintenance supplies, and street maintenance supplies is 91. Then we have debt service for 4,000. This is an expenditure for interest we have taken on loan for 4,000, and the total expenditure will be let me the total expenditure $294,000 plus 1,190,000 plus 97,000 plus 386,000 plus 91,000 plus 4,000, and this is equal to 2,062,000. Now, revenue minus total revenue minus total expenditure. In this case, there is an excess of 48. There is a small mistake here. Total revenue will be 2,100,000. So total revenue will be 2,110,000, and so the difference will be 48,000. If you can remember, the fund balance at the beginning of the year in the T account was it was 70,000. So we record the beginning balance of 70, and the total now is 118,000. We move on to the T account for the to the statement of revenue expenditure for and changes in fund balance for training and special revenue funds. And here there is we are going to have I think there will be only one expenditure, safety, 33,000 over here. So we have the public safety salaries of 33,000. So the total expenditure is 33,000. Now you see the revenue is 30 and the expenditure is 33. So we have a negative fund balance of 3,000, and the beginning fund balance for was 10,000 for special revenue fund. So we have a balance of ending balance of 7,000. Next we are going to prepare the balance sheet, and this is going to be relatively easy as not too many things are to be recorded. We have cash 123. For special revenue fund we have cash of 7,000 only. Then we have property tax receivable, and property tax receivable is 20,000. There are no receivables for training and special revenue, so we have 7,000, and this will be 143,000. Then we look into the liabilities. We have accrued liability of 25 for general fund, and there are no liabilities for training and special revenue, so the total is 25,000, and here it becomes 0. And the fund balance now are going to be restricted and unassigned. Unassigned will be for general fund, and that is 118,000, and for special revenue fund it was 7,000. So the total funds are 118, and that this is going to be 7,000. So the total fund balance will be 118,000 and 7,000, and the total liabilities and the fund balance will be 143,000, and this is going to be 0 plus 7, that is 7,000. And you can see that the total of assets is equal to the liabilities, so that we have done it correctly. So let us summarize about what we have talked about in this video. The government fund accounting, we have talked about the government fund accounting cycle for two governmental types of funds, rather general fund and special revenue fund. As their transactions are similar, modified accrual is the basis of accounting for the two funds, which is a combination of cash basis and accrual basis. The difference between the two fund accounting are general fund revenues do not specifically support particular programs or agencies. It accounts for all unassigned resources, while special revenue funds account for and report the proceeds of specific revenue sources that are restricted or committed. For both the funds, first the adopted budget is recorded, that is the estimated and revenues and appropriations. Then that is what we have done over here. You can see first we record the estimated revenue and appropriations. Then the budgetary control ledgers are made for estimated revenues and appropriations, as we have done over here. and then encumbrance entries are recorded first on any purchase. As you can see, we have recorded here, whenever we made any purchase, we first record the encumbrances. And in case of expenditures that are normally paid in a timely manner, like salaries, you can see that for salaries, encumbrances are not recorded, as such encumbrances serve no purpose for control. So this completes the illustration on general fund and special revenue fund accounting. We have solved an illustration comprehensively and explained how to generalize transactions for general funds and special revenue funds. We explained how budgetary control is done for revenues and appropriations of expenditures through the encumbrance system. We also illustrated how to post general entries in the ledger. We showed how to prepare pre-closing trial balance, and finally how to prepare a statement of revenues, expenditures, and changes in fund balance. So I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe, and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamer@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment section below, and or send me an email, and inshallah I will reply you back. Thank you so much and happy learning.